Hello, everyone. Welcome to another Mortgage Leadership Outlook brought to you by NMP and NMP TV, where we meet with some of the greatest leaders and the best minds in the mortgage business to find out what's going on. It started back, when, all the chaos was going on with the coronavirus. And we just basically wanted to know, what should we be saying? What should we be saying to our borrowers? What should we be saying to our employees? What should we be saying on our industry, to the media? And it's evolved where we're now actually, talking about what are we doing with today? Like, from the lessons we've learned, how are we dealing with the new norm. And with us today, I've got my good friend, Joe Dahleen, who's the Senior Vice President of Strategy and Sales over at FirstClose. But man, this guy is a technologist before actually technology was in the mortgage business the way it was in today. I mean, we're talking about like when your technology, like if you seemed like leading edge, if you went from a thermal fax paper to plain paper fax paper, like, and during that time, that crazy man that's sitting to this side of me created actually a pricing and eligibility engine on a Palm Pilot.
Yeah,
right?
That was a long time ago.
So, I mean, so long before actually, we had, a pricing and eligibility engines like that we have today. Before actually we had, a point of sale system.
Right.
So just take us back actually, like a little bit, into the history of Joe Dahleen. So here you graduate college, you get a job in the mortgage business right away, right?
No, I was actually in the pizza business. I owned pizza restaurants.
Okay, hold on for a second.
Yeah,
right.
I was a pizza connoisseur, California pizza joint. I got it up to 3 restaurants, and my partner ended up dying of cancer. And I was like, oh, shit, what do I do now? And actually, I took all my profits from selling these restaurants, and I went into commercial real estate in Silicon Valley. And after a year of just burning through capital, buying the 3 or 4 suits I needed, plus the new Sable to drive the people around in, because I was like a commercial realtor, right? Selling these big, huge, and, leasing these big, huge warehouses. After a year, I was at one of those big, giant broker opens, and I opened my mouth about this deal I was getting ready to close, and it was gone in the afternoon. And I was like, oh, that was a really stupid screw up. So I turned to my guy that I was running with, I was running under, who, wasn't hurting for money. I said, well, what do I do now? And he goes, start over again? And I was like, yeah, in a different profession.
Oh, shit.
So I drove my Sable up past Los Altos and into Walnut Creek, where I got a job at a builder, where I got into mortgages. And he goes, that's the seat. Watch that machine over there. That's called a fax machine. Whatever comes off of that, just read it. There's the phone book, and that's a phone, and good luck to you.
No.
Yes.
That's insane. Okay. Now, I mean, so first off, I'm trying to pay attention to actually to your story and about how you got, but all I'm hearing is pizza. I'm hearing pizza now. Like I'm, from New York. So I gotta ask you. So where is actually, where is the best pizza that you've had in the entire country? I'm assuming. What's that?
I make it myself.
Wow. Okay.
Yeah.
That's fancy.
No, I'm a pizza connoisseur. There's certain kinds that I like. I'm very particular. I got to go pick it up, and I'm always grading people and everything else. I always figured if I ever fell out of the mortgage business, I had to go back to something. Bartending and pizza ownership, pretty easy, right? Pretty easy. So I could do any of that.
All right, so let's talk about your first deal. So here you got your fax machine, you got your rate sheets, and they give you the yellow pages, or I'm sorry, the white pages, and you got Mr. Dahleen, here you go make some phone calls. What do you do from there?
I was kind of aggressive in those days. I went out and took a half-page ad inside the local Palo Alto Times. And I did it for refinances, and I started getting deals and everything else. And I got my first deal signed, and I couldn't figure out why it didn't fund right away. I went up to the funder and said, hey, why didn't my deal fund? She goes, well, it's called a right of rescission, Joe. And I was like, oh, what's that about? So that was my first deal. But I quickly graduated. I got recruited out of there, went to work at U.S. Bancorp Mortgage. They were buying the U.S. Bank of Washington at the time. They gave us jumbo money for half of conforming rates, underneath conforming rates. So I took this ad in the Palo Alto Times. I would do like 40 deals a month. of just
Goodness.
easy refinance, all jumbos between 500,000 to $1 million. And so I made so much money. It's like, why wasn't I in this business in the first place?
Oh my goodness.
So I would basically work three weeks a month because I'd camp and go to Tahoe and do all those other things you do in Northern California. And I was just living life great. It was really a great experience. And that bank money ended up drying up, and the market got really high again with interest rates at that time. And I bounced into wholesale. I went to work for a little company called Long Beach State Savings Bank.
Is that anything to do with that's Long Beach Mortgage?
Oh, well, one office and one location in Orange County, California, back in those days.
Wow. So, all right. So now just backtrack for a second here. So, 40 loans in a month. Now, 40 loans in a month today is unbelievable, insane. I mean, there are people that are doing it, but like they're doing it with like a lot of people, unbelievable technology.
That's right.
I mean, so like, what's it like doing 40 loans? And what year is this about?
It would have been like 88.
88. Okay, so you're
87?
doing 40. So this is
88?
I mean, I'm assuming actually. Listen, I mean, I know actually the last time I closed a loan where there's no digital. I mean, the file's like this.
Oh, so, yeah.
I mean, I can't imagine like in 88 what those files look like.
I, the killer processor, she taught me mostly the business. I spiffed her on every file. I mean, back in those days, your processor made a ton of money. Yeah. And she taught me a lot of stuff. She was awesome. She just, man, I didn't have to really do anything. All I did was take the apps and do the glad handing and lock the rate. That was it. She did everything else. And she taught me the mortgage business like nobody's ever taught me.
Oh, that's so cool.
Yeah. So it was very, very cool work with a really good manager and that kind of stuff. And, had the banking of a bank, but still got to broker stuff. And so that was kind of fun.
Okay. So fast forward to then you were at Long Beach Savings and Loan. Tell us about your experience in there, and like when did it morph into or did it morph into Long Beach Mortgage while you were there?
Actually, when I worked in the Long Beach Mortgage, I was the first guy to state of California. I was in Northern California. I was the first guy to state. I opened up Seattle and the Pacific Northwest, and then they moved me to Atlanta, Georgia, and I opened up the whole Southeast for Long Beach. When I left, I went to work back then at Ocwen Federal Bank, where I developed a risk-based automated underwriting, risk-based pricing engine. That was that Palm Pilot thing. And I developed that for Ocwen. I moved from Atlanta to Portland, and then we moved from Portland to LA because I got transferred for Ocwen, and then Ocwen Bank shut down. So that's when I went to work at Amresco. I worked for Lehman Brothers. We bought Amresco, shut it down, and opened up the first Finance America. And that was me, Matt Soto Jr., and a bunch of other friends, and from that time. And then I was in Orange County. And then after that, I moved to the Pacific Northwest, where I live now, and just going on with the same old thing, as you know, my whole career.
That's fantastic. So now, and obviously the Palm Pilot application was for industry professionals. It wasn't for consumers. Yeah. Now, when was the first time? Because I remember, listen, you were one of the first people that talked to me about about a point of sale system. We had actually Tim on last week from Beach Party, who was the other person who told me about. I didn't even understand what he was talking about. I'm like, what do you mean we're going to do this? So when was the first time that you saw that opportunity to bring actually an application process closer to the consumer through actually
it was a pivotal moment for me. I'll remember it very well. The crisis hit. I was working for Lane Sapp at Mila at the time. We were very successful in what we did, and we closed down Mila, and I just sat there thinking, wow, this is crazy. This was early, mid 2007, really before a lot of people knew what was happening. And we shut the whole thing down on the weekend. It's like, wow, we went from 5.6 billion to nothing. And so I launched a mortgage business. We bought a high-touch special servicing company out of Plano, Texas. We launched Go Financial Solutions in Seattle, Washington. I did it with my friends Dave Vita, Josh Nowak, and Jason Tanaka, all guys who came from Option One. We developed our own company. We got it launched. We launched eNotes. We launched the eMods in 2008. But in 2007, to answer your question, I went on the board at Zillow. And I spent 5 years on the board at Zillow watching everything they've done. And I got into working with them into the Zillow mortgage marketplace. And that marketplace, and I had taught Zillow the mortgage business at that time, and with the guys that I was working with, and they were 3 blocks down from my office. So I could easily run down to Zillow and come back, run down to Zillow and come back. And I was really just secretly building it for myself so I could do my own auto quoting, because I was standing up a call center at the time. And we were building the marketplace out. And I really realized that the impact of what Zillow was doing back in 2007. I mean, even my wife said to me, she said, "What are you doing at Zillow? What are you doing? Who's Zillow? What's Zillow?" I said, "It's no big deal, honey. It's no big deal." She goes, "Are you getting paid for this?" I said, "No, they're only giving me stock, you know." So needless to story, I was on for 5 years, and it was very, I think very early on in 2007, I saw it and I said, "Oh my gosh, everything's moving to automated quoting. Everything's moving to automated disclosures." And that's when, earlier days of what was happening with the Land Title Association, when they came out with their TitleWizard.com, which was really the genesis behind Closing Corp way back in those days. And I can envision this whole automation happening at the point of sale. And I said, this is the future of our business. Now, again, I'm sure this was 2007. So I was definitely light years ahead of it, it seems like, because none of that really came to fruition until really, mid 2000s, 2010, 2012, when people really started deploying these strategies very successfully. Yeah. And so yeah. So I've been focused on it for a long time.
All right. So
as a lender.
Yeah. Yeah. Now just talk, where do you think we should be? Like, where do you see actually, like with the technologies today, describe actually what you see as the perfect mortgage process? Because I'm still in awe that we're celebrating closing a loan in 2 weeks. Like, that's just ridiculous. The information is out there already. Like, all the rules to make that decision based on the data that's out there it's already out there. So like, why are we're celebrating? Because we closed a loan in 14 days. I get, we have regulations that we have to adhere to. I understand that, but describe actually what you see as the perfect mortgage process today using all the right systems. And then I want to know actually, where you see it actually in the future, because this is, whatever you're going to say, I got to bet money that it's probably going to actually happen.
Yeah, it's happening now already. Basically, the consumer's in control now. The consumer at the point of sale is the one who's initiating these things. They're pulling their own credit. They're doing their own verifications of income. They're doing their own verification of assets. They're aggregating their bank accounts. They're verifying their identity. And they're single sign-oning into these core banking platforms to pull down data. That's a reality. That's happening. That tech stack is live and well. It's now really kind of coming into massaging all of that. I think it's easier from what the technology has been done. Your last guest, Tim, and at Be Smarty and all these point of sales, they were earlier on, help people out. But really, the problem with this whole piece is that automation into the LOS, because everything has to be in this LOS. And so that's really been the biggest problem. We could automate a lot of the stuff that the borrower could do, but then there were still downstream touches here in the keyboard lender side portal or inside the LOS to kind of manufacture this whole thing. Now what's happening, what we can see, is that we've moved a lot of the services that traditionally we would order inside of this LOS, or in my cases, in the second mortgage field, the commercial LOS, right? Where you have lending quarterback or lending QB, you have loans PQ on the home equity side that I really integrate with, and a lot of these other ones I integrate with that are not typically your first mortgage ones. So a lot of this stuff is now being done at the point of sale. All of these disclosures are being done at the point of sale. Reg Bs now, if they don't qualify, are being done at the point of sale. All of these type of things are being done now where the consumer is initiating the process. In other words, the consumer is saying to us, hey, don't contact me. Don't call me. You can email me maybe, but don't get crazy with it. I prefer a text message, but when I need something, I'll call you. You don't need to call me. Just put it all in writing so I can see everything right up front. And so that's really what people want today. They want transparency. Where I saw Zillow did that, started in 2007. I think transparency's really moved very forward to now, as I told you last year in October, when we did the same kind of video last year, what I said was going to be the biggest thing that's going to happen in 2020 is perfectly aligned. Identity management is so important to consumers nowadays. If you do not have a slick little onboarding piece for your clients today, you're frankly are not going to compete. And that's just how it's going to be, unless you're really good at taking manual applications and nursing the whole thing through, which we have proven to ourselves we're very good and very resilient as organizations, considering that we may have the largest refinance production we've ever had in our careers. So according to Kevin and those guys at PRMG, right, we're going to make so much money on these refinances the next 2 years. We're not going to need to work in 2023. We just take a year off.
Yeah. Well, we're not going to have any refis to do then. That's for sure.
That's for sure. It's all going to be in my business, home equity business right now.
Yeah.
And really, I'm building technology today to get us into the first mortgage side of the business and participate in that, because a lot of the stuff we do on home equity side, it only takes a minute and 40 seconds and the whole package is complete, right? Now I'm just going to take that same thing and plug it into the first mortgage business. And that's where I'm kind of going with that piece. But I think today it's really customer initiated and customer driven. If the customer wants to control this, Kyle Camus had it long time ago, and he kind of diverted from this strategy, but he did have it many years ago with his point of sale. What he did is that he allowed the consumer to participate, and every time they would do something in the file, like verification of assets, verification of employment, upload your paycheck stub and W-2, he would give them discounts on their closing fees, right?
Oh, wow.
And I thought it was a really good model. I don't know why he ever pivoted off of that. It must have been something to do with compliance or something. I don't know, but I thought that was ingenious in those days. And,
so it's not only gamified it, but gamified and financially incentivized.
Right. You talk about gamification. I literally thought that when I was launching that business in New York, remember that one time I was raising capital, I was launching business, and I saw you a couple times in New York, Andrew. Yeah. Well, it was during that time that I spotted Mortgage Hippo at that time, and I saw the gamification of the application that they were doing and what you could do with it. And I said, aha, somebody's figured out the gamification piece of this. So yeah, I think we should get back to that. We should be more creative in this type of an approach. I think realtors are doing a really good job with that on the technology side. And now realtors are getting the mortgage business a lot with the same kind of stuff. So that's happening. They have a big leg up because they have access to all the MLS data, which loan officers really don't do too good of a job at, right? So there's still a lot of innovation that can be done. But basically, if you're not doing it for the consumer upfront at the point of sale and giving them rates and closing costs in an LE instantaneously at the point of sale, you don't have a shot of getting a refinance closed.
Wow. So, I want to just backtrack actually to your experience at Zillow. Right. Would you actually do you think actually with what's happening today at Zillow as far as like Zillow offers, and now they've become this the iBuying machine that they are, was that actually do you think that was something that was planted back then? Like is the things and the domination that they have today, they had this all planned out? That's all.
Rich Barton and Lloyd Fink, long before Spencer got there, I think they mapped this whole thing out ahead of time. I think they saw it all coming together. You look at Rich Barton, what he's done, he's been way ahead of it. I've never seen a company. Actually, he did have one app that failed recently. It was called Trover. It was a travel app. It was beautiful app, very well done. He had it for years, even when I was in New York all those times. I'd use it all the time in New York. But other than that, the guy's never failed. And he has this long-term vision, right? And so I can even see back then in those days in earlier 2007 when they were putting this thing together, what was really happening. And it was very interesting to see these people in the future peel off to now become friends of mine in different parts of industry, still having that same kind of effect. I thought that was beautiful. And I really did think that, Rich Barton really, he filled my boots with so much knowledge in about 5 minutes. I literally in 5 minutes, you could have your own strategy baked by talking to that man. He was so impressive. And Lloyd Fink too. I know he's the guy behind the curtain most of the time and everything else, but quite genuine, quite really smart. Back in those earlier days, you could kind of see it all happening. And when they were putting this whole piece together, they couldn't figure out a couple of these components, and I showed them what it was, and they just got too busy and they started developing it. So I think what we've seen now is the combination of a very quiet formation of the strategy that's now really rolling out, and now adding this mortgage business that they bought in Kansas City, modernizing that, building their own POS, building their own AUS. I don't know. They're doing everything now. And I think once they figure out this automation around, fixing and flipping these houses and really how you do that, which they're really focused in on with all the other assets they have and the transactional management platform they have from Loop. Oh my gosh, it looks really good. I'm still a stockholder.
That's great. Good. I'm glad to hear that. So long term, you still think actually that they're actually a great play. And
well, I don't know about the iBuyer model. I mean, it's still, experienced buyers are probably not going to go that route. Upper end echelon type buyers are not going to go that route. But we have a lot of non-owners and second homes that need to be sold that way. And I think those can be done really good. And investment properties, like I said, could be done via the iBuyer, which I think is very smart. Buy and hold a property, not fix it up and just dump it over to Zillow, let them fix it. I think that's a good strategy. I don't think that really quite happens all the time. I see some other things develop out of there that this company called Curbio, very interesting. You want to fix up your home before you sell it. They come in and remodel your whole home. They throw a note on your property when it sells. They get their paid back for all their work. You don't have to come out of pocket with it. That's genius. Wow. That's genius. Out of this whole iBuyer thing. You could see the iBuyer thing happening way back earlier on when you had all these hedge funds going out and buying all these properties back in 2008, and all those people that did different things, and now they've morphed into different businesses. And so it was really interesting. And I think, and I don't know this for sure, this is my own thought process and my own belief, but that Rich Barton guy knew from the very beginning where he was going to end up. I think it formulated and changed and pivoted a little bit, but I think he always knew that if he had all of these components together, that's why they were never in a rush to try to get there. Yeah. They've been taking their time, creating these acquisitions and everything else. Now what they kind of have is something very, very unique.
That's great. So let me ask you this, and Joe, you always actually when you find cool technology, you become like a lack of a better word, like a fanboy. You love it. Yeah. You get into it. So yeah. In the industry right now, we're doing a conference or a demo day on Tuesday. I'm gonna show up my little thing, just do a little shameless promotion here. Yeah, Originator Tech. Did I spell that right there? Okay, Originator Tech, July 21st. There's the link. Okay. Yep, OTech is our just to kind of quickly get it. But we have a couple of companies that are going to be presenting. But I want to get from you actually, if you have a company right now that you've seen that's doing some amazing things that's blowing your mind away, mortgage technology, focusing on the origination process, and focusing where it betters the lives of the originators so they can help more borrowers.
Ooh. I should make sure I lined up my commissions or something first before I give out some good names. Yeah. I don't know. I think that, Finicity being acquired by MasterCard is pretty impressive. I think that's gotten really big and strong on the data aggregation side. I see what Brent is doing over there at Form Free with Passport. That could really innovate the industry. If you can get a borrower to go through that little process, I mean, it's over. As we talked about that last year, that could be the new point of sale, really, forget all the other stuff. Data aggregation is big. I think identity management is huge. I think, leveraging this data in the cloud is huge. I see that a lot of these automated processes that are kind of fully coming in together. I still think it's very early there. But there's a lot of people talking about AI and they don't know what they're really talking about yet, but they're getting around to it. Everything has something to do with AI nowadays. And I don't know. I think there's some really cool things that are happening. I don't really want to call out any specific vendors other than FirstClose. FirstClose doing amazing things. We have this really cool Equity IQ tool that we've been working on, and we're working on a new platform as well, FirstClose One. But anyways, there are some really cool innovative strategies, and I don't know if it's something that is like from hello to here's your money type stuff yet, but there are very good truncated pieces that can really help you. I think of what Rob Withers is doing with Mortgage CTO and his FeeWise. If you're an Encompass user and you're a TPO and you're a Encompass loan officer and you want to have an LE at the point of sale, that's like a no-brainer. because you can't really do the LE in LO Connect yet, unless you did use Rob's software. He's got a little niche there. I think the aggregation companies are doing really well with the data. I think that, there's a couple undercover things that are happening right now that could really revolutionize the way that verification of income is done.
Really?
Yeah, that's coming very quick. Let's hold on to that one. I'm under an NDA, but that's going to be amazing. And it should have been out 4 years ago, but it's coming now, and it's got a lot of money behind it, and it's going to be big.
Wow.
Big.
That's awesome. Fantastic. Big. So I guess we got to when can we meet up again to talk about that?
Sure. Yeah, we should talk about that. Let me get the okay to talk about that, to bring it up, because you'll probably want to dedicate an extra special show on that one, because it is the smartest thing I've seen in 10 years.
That's great. That's fantastic. So the future. Let's talk about actually the future. Like, is it going to be instantaneous? Are we going to, putting aside?
I think the last leg of this whole thing is generating that instant decision and the instant loan commitment and the instant LE at the point of sale.
Yeah.
We do that today in other type of lendings, right? And we have a lot of these non-bank fintechs that have really taken this on themselves and really doing a really good job at that. And that's really spanking the banks and credit unions hard, because they're competing against these non-bank fintechs who have all of this capital and raise all this money, and they can just focus on what they do as their core business, versus a bank or credit union's got all these different products they got to support and everything else, right?
Yeah.
And so they get squeezed out of some silos of business. But the future really is all about generating instant decisions and instant commitments. So you don't have to process a loan if the borrower, one, doesn't want to go forward, or two, they don't qualify, right? Like it's like on the home equity business, like 64% of loans fall out in the home equity business. And what are those reasons that they fall out? One is they don't have enough equity for the loan amount they're requesting.
Okay.
Or their credit score doesn't meet it. Well, those are two things you can do up front at the point of sale and turn it into a great customer experience. Yeah. And so that's what I do at FirstClose. I do all of that at FirstClose, and I try to, maintain that. Now that is coming to where I think it's going to be coming to, where you don't just have all these point of sales are connected to Fannie and Freddie and getting that instant decision at the point of sale, so then you can fulfill those tasks from the borrower. I think what's going to happen is that I think what's going to happen is that the AUS is going to leapfrog in front. You're going to get your soft pull credit report. It's never going to be a hard pull anymore. And you're going to bang it off the AUS engine. And it may be a faux engine because Fannie and Freddie only take live credit reports, not soft pulls.
Yeah.
So I believe people will move into a cheaper AUS, a cloud-based AUS that they only pay every time they hit against the engine. So very new, creative, automated underwriting strategy, right? That's very cool happening.
Yeah,
I've been very deep into that. I've done some surveys here recently. There's not a lot of people, using this today. I think it's a great thing for me to focus on as of recently. And my automated underwriting engine is going to be killer because I have a lot of experience in that side.
That's all.
But I think that's going to really, what it's doing is that it's putting the auspices back onto the client, who then makes the decision if they want to move forward or not. Because we really can't do anything until they move forward. And when they move forward, then they're going to move through this streamlined channel because most of the data is done up front. We need to leverage data, not documents. Leverage the data. So that's really what's happening. And that's really kind of I see the future is automated instant decisions, automated commitment letters, and automated LEs. Like that. I don't need to talk to you. I know it's always going to be right because the computer did it. Right?
Yep. That makes all the rules are already defined. The data is already out there.
But that doesn't mean the loan officer is going away. The loan officer is now really valuable now because now we're using the best part of their brains. The loan officer now can use their cerebral way to help and provide advice and experience advice to clients making these big decisions in their life. Today, they're mostly worried about data input, making sure the LE is correct and doing all this stuff back and forth, which they're never good at.
Yeah.
And they've got, if you go look at their user ID and password list, some of them got a list that's an elbow long. It's like, how do you even, you're like a mini chief technology officer to be a loan officer today, right? Half the stuff these owners put us through, right? And so we need to streamline that noise down to let our professionals do what they do best, is interact with those clients and provide really good advice, and let them focus on how to help strategize that client, because that's going to provide more value. That's going to give them more higher NPAs, and higher score and better reviews and all of that stuff, right? That really generate into more business.
Yeah. So, and so if the originator can work on understanding the needs of the borrowers and actually having those conversations, those meaningful conversations,
and the right data
terms,
right. and you don't know your property. You don't really know your property taxes, do you?
I do, unfortunately. It's ugly.
So, it's Brooklyn. It's worse. It's the worst thing ever, right?
Yeah, Long Island. It's even it's just as bad. But yeah.
So you understand. But I mean, a lot of people don't know these numbers, and those numbers are so important. And like, if you're trying to get that appraisal waiver, or you're trying to get something done in the AUS engine, you got to be really laser focused on your numbers. Yeah. So, because you'll need to give advice about how to, hey, you may need to expunge that visa and come back and buy a house, in 30 to 60 days now, when your score is going to improve a little bit and you don't have that extra debt, because I can't qualify you with that debt at this point, right? And especially the way that that's working, and the way we kind of brutalize on the income a little bit too as well. If you're not your standard W-2 salary with a little bit of commission type borrower, boy, we really put you through a lot of pain in this business, and that's ridiculous. That's ridiculous.
So Joe, I just want to know how committed you are to the loan officer and the future of a loan officer and their success. So, I'm
committed, bro. I'm committed. We're not changing the rules on that. They all got to have a license anyway. Somebody's got to sign the damn app. Yeah. So that's always got to happen.
So, do you still see it being a huge opportunity if someone wanted to get in the business today? And they
if you were young, this is a great business. If you were young, this and becoming an appraiser, right? I mean, because all of us are old and they're all getting out of the business.
Yeah.
Right. We're washing them out right and left, it seems like.
Yeah.
And really, frankly, if you're not like a super wizard on the phone nowadays, forget the mortgage business. I mean, and frankly, there's some, I would be only driving towards top producers, highly improved in their local markets that can make an impact, or I'm going right out of college, training them new, getting them spiced up and get them going, and give them a good living, get them built up, right? They don't need to make 150 basis points, 250 basis points like they did in the past, right? They're good with 50 basis points.
Yeah.
While you give them all this knowledge and train them up.
Is that the person from the college? Are they call center? Are they distributed retail, actually out in the pound in the pavement?
It all depends. These folks that are coming out of college today they've had the part-time jobs, they've had the service jobs. They are looking for a fit that's high impact, that's high energy, that they can really build their own book of business in, not so much sit on the salary boy train, right? And those people are uniquely qualified for this business. We need younger people in this business that can do that. So yeah, I would go for real young ones myself.
Fantastic. Wonderful.
That doesn't mean they don't have talent, right? I mean, we got some.
Listen, but they don't have the knowledge. They don't actually have the book of business. They're, you're teaching them how to fish. So that's awesome.
That's what Lane Sapp made me do. I used to hire 20 a month working for Lane Sapp, and I knew only 16 would make it through my class because my class was brutal. It was a 3-week class, right? All day long, right? And everybody got their own 12C when they got into my class because they still had to use the 12C. I wouldn't let them use the computer.
That's great.
Still got the 12C. But, I think that's a good way of doing it and helping them understand and exposing this. They may not all be perfect for this. Some may go into processing. Some may go into underwriting because they're very analytical. Some may go into appraisal management. There are a lot of people that I hired that fit in different spots in the organizations. And today, they're still using me for references. Way back.
By the way, we got a question that just came in from Mr. Joel Berman. With these instant decisions on the horizon, how can consumers understand the role the LOL still have the value? So I think
Joel's got it correct. I mean, the LO has to build value, and that is being there when they're needed. And that's not always doing this complicated work and trying to board a loan inside their LOS. That can be very difficult for most. Leveraging data and new technology at the point of sale really does help them you see some of the CRMs out there, they're really taking a good advantage of that. Then, unfortunately, you got to have like the whole suite of products. You got to have this CRM, you got to have this point of sale, you got to have this automated decision, you got to have all this stuff together. The loan officer needs to focus on where their highest and best use is, and that's engaging with the consumer. And that's going to be at different times. It's not going to be at 8 o'clock on Monday morning.
Yeah.
It's going to be Saturday afternoon. It's going to be Sunday morning. It's going to be the 4th of July weekend.
Yep. Yep. When they're having conversations, when they're at a party and saying, hey, something, I think let me shoot a text message.
Yeah. I mean, even me with all my experience, I still had to call my financial advisor today and said, hey, how should we handle this? What should we really be thinking about here? I'm really concerned about taxes, and those are things that I think are very important to really what's happening, because it's not, when we start looking at real property and we're buying property, the loan officer could provide tons of advice around the subject property, all the things that are going to be happening, all the possible bills that they will have, and all the taxes and the HOAs and the everything else, and how much all those property expenses are really factoring into the overall value. Showing value like that and educating the loan officer needs to really get focused on financial education for our clients, and really provide an impact and value, not just to the person they're speaking with, but to their whole entire family. This person you're speaking with in this lead and this opportunity is only as good as you can leverage off of that person 2 or 3 other referrals if you were good. Yep. And we do this wrong in our business. We have that loan officer focusing on data entry and doing stuff like this that means nothing to them, instead of a captive audience together with that consumer, providing real value, real value that people say, oh, I remember that Andrew guy. Yeah. Yeah. Right.
He gave me the confidence. He made me feel like that he cared about my business. He knew his stuff. And he always responded the way actually. So if I sent him a text, he responded right away by text. Not if I sent him a text, he called me the next day.
And it's all the little things, post funding too as well, helping them with the mover, helping them understand. Okay, when you get this thing set up, here's all the things you got to get set up. And those type of things. And after they're done, we do a really poor job as loan officers, really. I mean, we have some very good professionals, don't get me wrong, but some are very stupid about this. The deal funds, and they don't even follow up. It's done. It's funded. I got paid.
Well, listen, and that's part of it is like, this obsession of being, I've got a purchase focused business. Well, that means you suck. I mean, if you're actually focusing on the purchase, that means actually, you're not maintaining your relationship. You're not doing actually what you need to do actually to keep that back. Because and I forget, we just had a webinar with Sales Boomerang like 2 weeks ago.
Great guy.
Great. They are going to be, shameless plug, on Originator Tech. So you can join us.
Good folks. Good folks. I was very impressed.
Amazing system, which, by the way, we also have Sales Boomerang. We got Capacity, FinLocker, Calix new Zenly thing. I love it. It's awesome. Yeah. Easy for brokers. Be Smarty and Lending Pad. But so on the Sales Boomerang webinar, they talked about, I believe it was like 11 transactions. Like, the typical borrower is going to see 11 transactions throughout their life.
Wow.
So it's not just one deal. I mean, but you think with a purchase, with a refi, with when they move up to their next home, they take home equity out. When there's reverse mortgage, there's 11 potential transactions that can happen during the life of a borrower. And to be focused on just hey, listen, let's try to actually do what we can to get actually the purchase deal. No, it's acquiring customers and keeping that customers for life, which is that's why a lot of the lenders that are committed to helping the brokers, keep that customer for life are the ones that are winning today.
Yeah, I would agree with that statement. I would agree. You got to make a meaningful impact for them to remember you anyways. And you're going to have to be relevant. And if you can't do either of those, you should become an appraiser.
Yeah. That's the easiest job today. Don't you listen? Okay, the job itself is not easy, but right now, man, they're I just talked to someone today. He was telling me actually that appraisers are right now rejecting jobs that don't fit because they're just too busy. It's too busy.
That Luke over there at Proxy Picks has got something going on for these appraisers. He can have an appraiser do a desktop appraisal like in seconds, and they just click off $200 every time they do it. Click, 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 click. It's like, wow.
So the funny thing about that, my kids make money with proxy picks.
Yeah.
Like I actually, so whenever a proxy pick comes up in the area, I say, hey, do you want to go take a little ride? And they go. I give them the phone. They take a picture, and they make money. Like if I have, I think my daughters have made like $50 actually, with the proxy picks.
Yeah. You gotta love the ACH too, right to your account.
Yep. So it's good stuff, man. So listen, Joe, always great hanging out with you. Very excited to actually, to our next conversation where you can be a little more revealing. Someone wants to get a hold of you. What's the best way to do that? I know we can find you on LinkedIn.
I'm FirstClose Joe. You can find me at FirstClose. That's the best way to reach out to me. You can reach out to me on LinkedIn if you'd like, but FirstClose is probably the best way to get a hold of me. And I'm doing some really cool, innovative stuff there that I think I'll be coming back around and showing you back in October. I got a couple more releases coming up that I think I'm going to shake this tree out pretty strong here. So I'm pretty excited what's happening. And the future here at FirstClose is very bright, very good company. Been around for 20 years, no debt, looking to scale and grow and acquire. So this is just a great place for me. I'm very excited for what we've been doing. I haven't been to their office yet, but I don't know where I'm going.
You say acquire as in acquire clients or acquire technology from other lenders, technology providers?
Yeah, we're going to roll up a couple of technologies. Yeah.
Fantastic. So is that how you actually get into the first business, or you use this product to get into the first business?
Yeah, no, I got enough product to get into the first business. I just want to have ancillary things that help me grow that I can bolt on to the whole thing to make it bigger, right?
Sweet. Fantastic. All right, everyone. Thank you for joining us for another Mortgage Leadership Outlook, where every Wednesday at 4 p.m. East Coast time, 1 o'clock Pacific time, we meet with the latest and greatest leaders of the mortgage industry. So excited to join us for next Tuesday. We have Originator Tech, where basically the entire day, or it's a half day, it's technology focused on originators. We don't care about the enterprise level. This is technology focused on the originator, because I believe happy originator, happy borrower, we keep those loans. So Joe, again, thank you so much. And everyone stay safe out there.
All right. Take care, Andrew.